Later, man. I'll see you later.
Okay, thanks.
And that's. What's up, everybody? Let me see one thing. Hold on. No, that's the same shit. All right, I gotta mute this. All right, everybody see the screen okay and hear my mouth? Oh, good, good. What's up, Oscar? Hold on, I gotta put like the air on or something. It's like too cool outside for air condition, too hot for nothing. I get all worked up and I'm dying. I would crack a window, but any little sound and the dogs go bananas. How's everybody doing? All right, so we got, we'll go over some stuff here. You know, I don't want to get too wonky. I know, you know, most of you in the Steam Room who show up on these webinars enjoy it just as much, if not more than I do. But for those of you who may be new to what we look at, you might not find it as interesting, but to each their own. All right, so what's interesting here, again, the dynamics at play is what make everything, in my opinion, so fascinating here, right? There's a much well-needed correction that we've been in for a bit. There's no real headline or catalyst as of yet, right? A lot of people, I mean, right now you ask, predominantly most players will tell you that higher rates is the predominant driver, right? Higher yields, that's what's spooking equities in a sense. But also, right, you had the not the debt ceiling, but the government shutdown. You get negative China news we get on a daily basis now. So there are other things at play, and it's made it really interesting here that, you know, there's not that one thing that people are eyeing for kind of the fever to break. There's a few things that have been, as we like to say, that the greater force at play that have been pushing equities around. You know, that's what happens. Like a lot of times, the stuff in a correction won't work in a bull market because usually what's driving the correction is something else out there that's got algos excited, and they're not, you know, they're not looking at the same shit we're looking at. They're not as emotional as we are. A lot of these systematic funds, you know, there's zero emotion, right? Markets levels break on equity indexes or the VIX, and they do what they need to do. All right. So it's been a real interesting backdrop. But at the same time, while it may be or may come across as confusing to a lot of people, there are things to pay attention to get an idea of whether squeezes can potentially find some follow through or downside momentum has that extra oomph that for those of you looking to play the short side, and that's where the money's been made predominantly up until today. So there are a few things we've been looking at, and if you've been showing up to the morning webinars or whatever the hell they are, live streams, you're probably aware of the things we talk about in the morning, right? So what I wanted to do is go over a couple of those things, just update people to where they're at, and then we'll quickly look at positioning and, again, Friday, tomorrow already, how things may shake out into the new week. Because, again, the last couple of weeks here, it was a really difficult backdrop for anybody who was looking to be bullish, right? We talked about that. And just to get everybody caught up, over the past couple of weeks, we've talked about that systematic fund crowd and the positioning on that side. They've been fully loaded on the long side in equities, short VIX or short calls in VIX, however you want to put it. And they've been sitting comfortably in these positions for a good couple of months as the market continued higher, or even chopped around when it wasn't continuing higher, but no downside follow through. And the VIX couldn't find a bid, right? So we came into this period of time where, nothing lasts forever. It's not a party every day in this game. And we were going to start to see how this whole systematic positioning will shake out. And again, it's hard to predict how fast it may develop or how violent or how much selling may develop over a period of time. But you can kind of get a gauge on it on a day-to-day basis and then keep tabs on where they're at, right? So we went from they were fully long, and we discussed how if the market continues lower and the VIX pushes higher, there's no emotion, there's no decision involved. A lot of these funds have to take down exposure, okay? And the tail risk off this positioning is if you do get that, which usually one headline, right? That exogenous headline that comes out of nowhere, and even if it's not that big of a deal in the grand scheme of things, kind of catches the market off guard, and the VIX finds that extra follow through to the upside. Okay, that's where these funds can really put pressure to the downside on equities and upside on the VIX, and that's that tail risk that it's not a guarantee will show up, but there's a higher probability of it, right? What we've seen up to this point here, it hasn't necessarily been that VIX control fund group, right? It's been the CTA crowd. So think of them as they're more like trend followers. Okay, the market goes higher, breaks certain levels to the upside, they add long exposure. They're looking to catch large trends. That's what they're interested in. Okay, and then when the market reverses course, again, there's no decision making involved. Maybe we'll hold it, we're up. As the market breaches certain levels to the downside, and there are other things that they measure like the VIX and some macro stuff, as those things deteriorate, they just take down their exposure. And if things continue to deteriorate, they can go from max long to max short in a period of weeks, if not shorter these days. Okay? So it adds a lot of supply, right? You hear that word a lot, especially if you've been following this stuff. Goldman's been talking about it over the last couple of weeks. You're talking about billions of selling that's been coming into even a flat market. Even if the market's flat, they are taking down exposure. Okay? So, if you think of it logically, unless there is a larger force at play that's going to come in and start buying things, right, to in a sense overpower this systematic fund selling, just logically think about it, it's going to be really difficult at the least to find any upside follow through with all that supply coming to the market, right? So that's kind of what we've dealt with over the past 2 weeks now, with the risk that if something caught this market off guard, it could get pretty violent to the downside over the short term, right? A lot of us wouldn't mind that. It probably set up a really nice long entry at some point. Those of you who've been trying on the short side to make some money probably have some fun, Lucci and the gang. So not everybody minds that, but if you're looking to stick out your neck and trying to catch a bottom, right, buy the dip, like a lot of people like to do, that's obviously a big risk that you have to calculate and weigh if you're looking to dip your toe in the water and start buying ahead of a potential bounce or a squeeze. Okay, So again, that risk reward gets skewed. You can't just ignore that risk, and it's not that low probability that it usually is when these systematic funds aren't as crowded, okay, aren't as long. And then on top of that, you have, I mean, it's almost honestly kind of, I wouldn't say we're at 2000-ish, but that's the only time I can remember where it's so concentrated. Everybody has just their blinkers on, their blinders on, and are focusing on just a group of names, to the upside, to the downside. And that's never a good thing. That's never a good thing, because a lot of times that itself tells you the health of the market, right? So whether they're, what the average player out there just assumes is that they can trade these 7 names up or down, right? Oh, if they're going higher, I'm going to buy them long. If they're going lower, I'm going to short them. And the game is never that easy. So now you have this added wrinkle to the mix of these highly crowded, concentrated names that are heavily weighted in the index that are likely going to drive people nuts in both directions, right? So again, trying to handicap the overall market with a group of names like that weigh heavily on those indexes doesn't make it any easier. So that's kind of what we've had to deal with over the past couple of months, and couple of weeks. And to state the obvious, that's not a backdrop to get excited about on the long side in any way, okay? The short side has been really nice, especially in some of these over-concentrated names, because they went up too much, they are severely overcrowded, and at least the initial selling up until the last couple of days, there were some nice moves to the downside, as a lot of you participated in because of that. I think now it gets difficult here without any added news to the mix in these names. I think it gets difficult likely on both ends. And don't get me wrong, when the market squeezes, they're going to squeeze. I'm sure they're going to have their day. But overall, I think big picture-wise in these names probably gets a lot tougher on either side, right? So what I've been hoping for, as you guys know, and wanting to see while we've been in this correction, is some of the money out there, not us, not retail players or individual traders, but some of the fund money out there to start rotating, right? To lock some of their profits on some of these overcrowded names, overextended names, and start moving money elsewhere, right? So you got, like, for example, you have parts of the market that have been significantly ignored for a long time now. And coming into this correction, we thought there was a legitimate chance that if the market pulled back, money would start finding other stuff, okay? It hasn't. And that obviously is not going to help the overall market in regards to finding upside as well. So it's been kind of like a buyer's strike, right? While some of these overcrowded areas have corrected, there's been a buyer's strike in almost everything else, okay? The flow's been a little bit better of late, the last couple of days. We're finally seeing that selective buying again, but again, it's just extremely, extremely selective, right? So nothing's changed there, right? Ultimately, I think that's what's going to be the confirmation that a potential bottom is in and a new bull phase gets started here, okay? It's not going to start with those, it's not going to carry on with those heavily concentrated names, in my opinion, right? They'll be part of any squeeze, I'm sure, but for that squeeze to find legs and for this bearish phase that we're in to be over, we're going to need to see buying broaden out and find different things, okay? If they find new names, potentially maybe the bulls be ultimately right at the end of this and we have a bull market of sorts, right? But one of the reasons I've argued that we're not in a bull market and we were just in a bullish phase, and now we're in a bearish phase, is because we're not seeing any new leadership. We're not seeing that broadening out. It's been, you know, almost kind of a rotation from different group, that's carried certain these bear market rallies in a sense, or these range bound rallies. All right. So the most important thing, especially if you're a follower of flow, if you're in the Steamroom, whatever, whether you trade these names or not, you want to start seeing new names pop up on the top bet list or repeatedly on the top bet list on these webinars we discuss. The more you see that, the healthier the environment. Okay? A lack of that and just weekly or front month action, puts and calls in the highly concentrated names and the ETFs, okay, that ultimately confirms we are still in a bearish phase, or at the least chop, okay? So that's the most important thing to take away out of flow right now, because again, we're focused a lot, I mean, for obvious reasons, but primarily we're focused right now because of the lack of buying and because of the poor backdrop on, on the long side, trying to catch squeezes even intraday, and on the short side, right, trying to catch these quick short scalps on the downside, right? So a lot of times we can be too focused on that and miss the big picture, right? Because here's the truth of the matter, and I want to get this off my chest because I don't think enough people realize this. When you're trading the indexes and you're trading the same names over and over on a day-to-day basis, okay, if you think you're going to discover something, whatever it may be, that you're going to hit 80-90% of your trades trading the indexes every day and the same names every day, long and short, you need your head examined, okay? You need your head examined. It's just not realistic, and it's not going to happen. Now, can you net come out profitable and make money if you manage your bankroll and your risk properly? Sure, okay? But I think a lot of people, what happens is they'll make some money on the short side and they think like this is, like they found God, right? They found something new. They found a new way to make money in the market. Now on the short side, scalping Tesla and Apple, right? Every day. And they can come in and do that every day. And it's impossible. So what does happen, and I've seen it every cycle we've been in, they're going to allow you, and yes, I say allow you, to make money on the short side today, tomorrow, maybe some next week, but they're going to catch you. Okay? I can promise you, they are going to catch you. And when they catch you, and you don't have that risk managed, right? You're not paying attention to that loss that hasn't been around yet, you will give it all back and then some. Guarantee. Okay? And if you don't think that can happen to you, you're in for a rude awakening. Right? So there's nothing wrong with us trying to come in and trade the indexes, right? There's nothing better than trading the indexes. Right? You can trade the indexes every day, in a sense, up or down. The God honest truth is, if that's your style and that's what you enjoy doing, you better figure out a way where your win-loss ratio, right, will be at best anywhere around that 50% mark, and your losses got to be smaller than your gains, to state the obvious. Okay? There's no easy money in this game, especially something you're going to enjoy doing like that. So, and the reason I bring that up is we get into these type of climates and people start to forget about, some of where the easier money is likely made and what type of market it's made in, right? Those are the trending bull markets, especially on the long side, where you can get away with mistakes, right? You can throw a dart at a name, especially early on in a bull market, and it's likely going to go higher, right? That's where you want to get more aggressive. That's where you want to try to make your money. Now, in these times, these are difficult times for everybody. I shouldn't say for everybody, but for most people. For most people, all right? Because again, this is what, if you ask anybody out there, that's the style they would love to play, all right? But it's the most difficult style out there where, and the reason I say that is because managing your risk is probably the most important part of this game, period. But it's more important for that style than anything else. Charts, levels, this, that. None of that matters if you're not managing your risk, and that's number one on the list. Because there will be losses, there will be losing streaks. There's no way around that when you're trying to do the same thing every single day, right? Because, again, think of it logically. Can there be the same solid opportunity out there every single day? Well, if it's not on the long side, it's on the short side, right? Just looking at it realistically. So, again, the reason I bring that up is you get into these type of environments where you can make some money doing it, especially early on, but as that trade gets more difficult, you start to lose focus on being prepared and waiting for that fatter pitch to arrive, okay? And God honest truth, those of you who know me, that's why I'm a long side only player, right? Because again, so not everybody's wired the way they need to be wired to effectively play both sides like that. For me, it would never be easy for me to get short, build up that bearish bias where I'm coming in every day making money on the short side, and then flip long when I need to flip long and get aggressive on that side. You understand? Especially when I'm in the midst of actively trading every single day, not paying attention to things. All right? So for those of you who are long only and are comfortable long only and are not familiar with the short side, if it's not your game, the best thing you can do is be patient, sit tight. If you need the needle, make sure you're playing extremely light. You don't want to get lumped up, right? Because again, the early part of a bullish phase or a bull market, that's where the meat on the bone on the long side is, right? So that's where that's what you don't want to miss. That's what you want to be a part of. And it's foolish to get involved in a more difficult time where, you're just basically trying to entertain yourself and hopefully make a little money and miss that, right? If you can avoid these tough times and keep busy when the backdrop is good and in the good times, okay, no matter how good of a trader you are, okay, you're going to find success in this game. Avoiding these times and getting caught in these times, that's it in this game. That's really it, right? All right, so on that note now, as positioning is concerned, because again, we're in a tough time, we talked about all that selling that could potentially come in the market, right? Larger tail risk and all that. We've seen a lot of it now, right? So let me pull it up so you can see what I'm talking about here. This is the note from Goldman. You guys know it from Scott, Tactical Flow of Funds. He does a good job of updating our clients on where they stand. So here was the CTA supply, right? They estimate 48 billion of global stocks for sale in the flat tape over the next week, 64 billion for sale over the next 1 month in the flat tape. Okay? Very front loaded to the next 1 week. So basically, this week and probably into next week is the bulk of this selling, right? Once they sell and they take those exposure levels down, if the market is finding some stability and hanging in there, now what you're going to start to see is on dips, on smaller dips, kind of what we've been seeing lately, they are more inclined to buy than sell. Okay, those sell levels, those thresholds start to move further and further away from where we see any aggressive selling again. Okay, so that's a bullish thing, right? That's a bullish thing. So the bottom line is what I'm telling you guys is that we've been in the brunt of this problem for last week, this week, and probably into early next week, as Scott points out here. All the levels that we were watching As you can see here, he mentions here, we are now firmly below all those CTA SPX levels. So any level that needed to get breached to bring on more selling, market breached it. It's already done. All right? Those lower levels are a lot further away from where they become a problem. We can't start worrying about that right now. Okay? So that's a good thing. And I would say the most bullish thing out there right now, as a whole in the market, okay, is sentiment and positioning. Okay? And again, positioning maybe not quite there yet, but getting closer. Okay? That's the most bullish thing out there right now. I think that's what bulls can hang their hat on. If something doesn't break, and we'll get to that in a minute, if something doesn't break out there, okay, the known likelihood there's going to be a pretty decent squeeze and rally. Okay, I'm not talking about start of a bull phase, but I'm talking about at least a violent snapback squeeze based off sentiment and a lot of selling that has already come into the market, right? So that's the bullish side of things. The negative or the bearish side of things. Well, let's talk about the VIX guys too. I got Mick Elliott here, right? So Scott was talking about the CTAs. The VIX crowd, very similar. Okay, the VIX crowd right now, meaning those vol control funds, they chew off the VIX, right? If we don't start to see some big movement in the price action, right? If it's sort of pretty calm, 1%, less than 1%, these VIX funds are going to start adding back exposure, right? So you're going to see VIX start to just dribble out. We were down today, and you're going to get buying from these funds as opposed to selling. Okay? So where that crowd becomes a problem is if you get that headline and that big VIX spike. That's where these guys get aggressive on the sell side. Right? So how can that be actionable? I'll give you a perfect example. You come in today, right? Market's down a bit, nothing major. Okay? VIX is kind of just chopping around, right? Not ripping new highs early in the morning. You're likely going to find buying from this crowd as opposed to any aggressive selling. So that's a headwind that's not involved if things are quiet and tame intraday, right? So for those of us who are active on an intraday basis, any pullback, fade, or weakness is an opportunity for a scalp on a snapback squeeze, right? So that's kind of where we could use this information now. If there's no big news out there with the VIX ripping and the market's down 1.5%, 2%, you're likely going to see these guys on the buy side, not the sell side right now for where we're at. Okay? So bottom line as a whole, as we get into next week, this burden, this risk, little by little goes away. Okay? We don't have to worry about it anymore. And that selling crowd is done. The systematic fund crowd was the big problem here. This was the problem, right? That was the overhang we were concerned about. You can't start buying a dip when you know that these guys are dumping billions into the market on a daily basis. Right? That's idiotic. So once this is gone, again, there could be something else that we need to worry about, but if there's not, it's definitely a bullish thing. Okay? So that's the systematic fund crowd that we've been talking about a lot over the last few weeks, and that's an update on that. Okay? The main risk here, and this is what I've been talking about in the morning and what I've been paying attention to. You can see it on the chart here, right? It's difficult to get long anything, okay, even on an intraday basis, if you have the VIX, dollar, and yields ripping higher. Okay? You hear me talking about that every morning, right? Almost even more than the flow because of the lack of flow. If the VIX is strong, right? If the VIX has a bid, the dollar's bid, and yields are pushing higher, your equities aren't going higher, right? You got to find a needle in the haystack to find the one equity that may be bucking the trend and going higher. So ideally, that's not an area to get long on an intraday basis, right? That, and on the opposite side, if you're playing the short side, that's a nice tailwind if you're finding entries on the short side. Okay? So that's kind of what I'm focused on daily on an intraday basis. And from this point, I did a little today this morning, kind of the first day so far that I've been a little, I wouldn't say aggressive, but a little, I haven't been doing much at all, as you guys know, because of the lack of flow. But if we come into the day and the VIX doesn't have much life, right? These things right here, credit spreads, are quiet, yields are just hanging out. I'm looking for squeeze opportunities, okay? I'm almost like forcing myself to find something I could play for a squeeze, okay? Doesn't necessarily mean I'm going to catch the squeeze right away, okay? But the way I look at it, that headwind that has been holding down equities where you couldn't get involved at all, if it's out of the way, based off sentiment positioning, things are more inclined to squeeze. All right? So even for those of you who may not have the access to follow a lot of these things, really you just got to follow VIX and maybe the dollar, right? Things like that. And like for an example today, if you look at the VIX, what happened? Oh, is that the VIX? Shit, I didn't see it. You look at the VIX today, right? This is today? No. Yeah. 28th? Yeah. Okay, so here's the open, and here's what the VIX look like, all right? So you had basically a nice morning to get long, and things kind of died down into the afternoon, but things didn't fall out of bed. You know what I mean? It wasn't like anything. There were some stocks actually even working in the afternoon. Again, it doesn't mean guarantee you're going to catch one of them, but you have a better chance of catching one of them, right? So that's kind of where you're looking for these opportunities on the squeeze side. And like I said, based off sentiment and positioning, you want to look for that more. This is not something the approach you want to take on an everyday basis, but based off where sentiment is right now, and I'll give you an example, like some of this stuff, right? This indicator we have banging in and out of buy signal, but this one's even more washed out. Where is it? Oh, wrong way. It's got to be here somewhere. Hold on. It's amazing. I never find it when I want it. I post it every day. Here it is. All right. So when this thing gets under 10, things get squeezy, all right? And, we were at a 3, I think this was going into yesterday. I think we were at 5 going into today. So that's why, that's why you want to take the more aggressive approach when that bearish tailwind is not blowing, all right? If the wind's going against you, things get more difficult. The wind dies down, you might want to attempt that 50-yard field goal now. That sort of thing, right? Based off where sentiment is. And listen, again, that doesn't mean you're not guaranteed to get stopped out, right? A couple of us got stopped out on things this morning off the open that we took a shot on, and that shouldn't scare you away from continuing to do it, right? Because if you probably played something else, you probably more than likely found success based off the morning squeeze. Again, the backdrop is more suited for that. Okay, the backdrop's more suited for that. So that's on an intraday time frame. Again, for me, that's solely where I've been focused, as you guys know, for quite a while now, based off the lack of flow. On an overnight basis, I know, again, people calling bottom, they want to catch the low, they want to catch a multi-week or day swing on the upside. I would say the risk reward, obviously, based off things sitting like at these levels is better now for a multi-day squeeze, a swing squeeze, kind of the way to put it, right? I think the problem is, and there's always a risk no matter what, but again, there are higher odds of a risk. The problem is of what rates, what yields have been doing, and financial conditions have been doing. Okay, and again, not to get too wonky, but if you remember throughout 2022, okay, financial conditions, when they tighten aggressively, okay, you got no shot of making money consistently swing long. Okay? No shot. And for those of you, again, I post those financial condition charts often. Let me find an updated one here for you. I think somebody from Goldman published it recently. Hold on. But I'll show you even like the swaps chart. Is this it? No? Hold on. Bear with me, guys. It's over here somewhere. Hold on. There's got to be a better way to find these things. I just don't know how. Right? I wish I had the days. It doesn't have the days here. That's my problem. Tuesday. All right. Tuesday. Hold on. I'm looking for what's his face from Goldman. That's not it. I think I just. Oh, no. Hold on. I got it. Sorry about that. I lost track of my days here. Keep forgetting today's Thursday. Here it is. All right, so here are financial conditions. Last time financial conditions were this tight was last November when the S&P 500 was below 4,000. Okay, so you got financial conditions because interest rates continue higher. The dollar have you seen the rip in the dollar recently? Right? All the makeup of financial conditions has created financial conditions to tighten pretty aggressively here. That you can't swing in those conditions. Right? If you remember 2022, the Fed, right, this is their instrument to kind of manipulate the economy, right? They wanted to keep financial conditions tight to bring inflation down. Okay, so that was their goal. And they did it for the bulk of 2022, hence bear market, every rally was sold. You couldn't make money on the long side unless you were in oil and staples, right? Basically. So this is the problem here on swing positions. All right, can you get lucky? You buy something today, sell it Monday? Yeah, but the odds are against you when you're almost like we were talking about on an intraday time frame, right? But this you can't play off intraday. This is if you're swinging, you have to deal with this, right? So you're going against the wind, into the wind. The odds aren't on your side, okay? So I think that's the main risk here. Obviously, is that yields continue higher, financial conditions continue to tighten. Either A, something breaks, right? Or B, this is the market telling the Fed they're too tight, a la late 2018, and they have to loosen. Okay? Either of those two scenarios end up being an extremely bullish thing, but the process is bearish. Does that make sense? That's the problem. Right? So, like, for example, if it's scenario B, which I just explained to you, and it's late 2018, where the market's just telling the Fed they're too tight, basically, and they got to cut it out. This is what it resulted in. Okay? You had some periods here where there was squeezes. All right? But net, I mean, this is where the most aggressive tightening took place, and that's where the Fed officially pivoted, like real pivot. Okay? QT was on autopilot. It was never coming off autopilot. Powell was being called the next Volcker. He's not going to budge. The market made him budge. The market was ready to crash. That's what it looked like into late 2018. And you see, once he did, what happened, right? But the problem is this, right? That's the problem. So that would be scenario B if the market's just screaming to the Fed they're too tight, right? If yields, continue to go up the way they've been going up, I mean, are we not going to see something break again? That's, come on. That's hard to believe. We saw what happened with the regional banks. There's a good chance we see something break. I don't think anybody's prepared for rates to move aggressively to the upside like they have. So you guys know we're big Hartnett fans from Bova, right? He had an interesting piece on, and he has another one today, but last Thursday. He said the true test for this market is going to be when yields come down from here, right? So in other words, here's the 10-year, okay? Eventually, we're going to see the yield. We're going to see yields come down, right? They've been going higher. I mean, look at this move. Almost everybody assumes that when they start coming down, that equities are going to rally, right? That's kind of the logic behind it, and that's where Hartnett thinks it's something to keep an eye on, because what could happen is you get yields start to go lower, but for the wrong reasons. In other words, the economy is starting to deteriorate. So bonds catch a bid, yields come down, almost like there's a credit event developing type thing. So his point was, if you start to see bonds catch a bid and yields come in, and equities can't find follow-through, can't rally off that, that's the sign that hard landing and bad news. Which is interesting, right? So yeah, you guys, I'm not even talking the currency game, right? But as you guys know, you got a lot of things here. Again, the dollar goes. This all goes into financial conditions, right? This all is a part of it, and everybody bears on the dollar. The dollar, dollar weakness, equities, can find a way to do okay in. When you have, especially now, with an economy, hanging in there in the U.S., right? Other areas, they don't look too hot. Dollar rip like this is gonna hurt. So, and these are forces that you just don't want to get in the way of. See, in the bull market, the sentiment indicators, these Fibonacci levels, whatever we have confidence in, have a tendency to work often in bull markets. Okay, that's because you have the tailwind at your back. When you get into corrections and there are larger forces at play, a lot of that shit goes out the window. Okay, I shouldn't say out the window, because you see sentiment gets washed up, and what happens is you'll see the selling slow down, right? Market put a Band-Aid on the selling. But let's be honest, if the dollar keeps ripping, yields keep ripping, right? Swaps and spreads, which I didn't even talk about, keep widening out. Sentiment doesn't mean jack shit until that stops. Right? We saw it even in 2022. Right, the dollar wrecking ball. Exactly. So again, financial conditions, I don't want to confuse some of the newer folk here, but financial conditions and swaps, these are all under that financial condition umbrella. I'll show you a couple of them. But this is what it looks like right now, okay? And you guys, we spoke about this, right? How many times? Now, for the past couple of weeks, okay, even though the market was net lower, thanks in large part, I would say, to these crowded mega cap names, okay, swaps weren't really indicating much. They were indicating more chop. Remember we were talking about it? To the point where if we saw sweepers buying things, we wanted to get long with swaps going sideways. Right? Forget about the indexes. If sweepers were aggressively buying names, we want to own those names in that environment. Okay? But fast forward, sweepers weren't buying anything. And now recently here, this rollover, you could see what's going on here. Right? I wouldn't say anything traumatic yet, but if this continues, equities are going lower. It's that simple. You know what I mean? If this continues higher, equities are going lower. So that's the risk right now. That's the risk. Ideally for bulls, right, to find a bottom, a floor, what you want to see is kind of what we saw post SIVB, if you remember. Maybe there's some news that comes out, government shutdown or whatever shit's out there, and these things stop. Okay? Here's SIVB going under. Right? You see here. Actually, I think it was here. No, here, I think. One or the other. But anyway, see how they just stopped? Right? It stopped making higher highs. It just stopped and rolled over. That created that floor and told you kind of the coast is clear for now as far as that major risk. And the news didn't get any better. Again, I bring that up because I think it's the most important point. It's not that the news got better here. The news was getting worse. After SIVB, PacWest was being rumored, PACW to go under, Truist was being rumored going under, Credit Suisse was forced to merge. So the news wasn't getting better. It took a while to get better, but swaps were kind of signaling the worst is over. And that would be, obviously, a lot better environment to hold overnight risk into. All right? So you don't want to get in the middle of swaps widening out. Because, like I said, as they widen, the machines out there, the quants out there, they're going to sell equities. Any little pop, equities are getting sold. Right? This is almost a mirror image of the S&P 500. If I inverted this, you wouldn't be able to tell the difference. So, okay, we're all big boys and big girls here. We make our own decisions, obviously. You shouldn't listen to me or anybody else for that matter. I'm just laying out to you the things we follow closely on a day-to-day basis and keeping you guys updated on it, right? Again, one of the big things was that systematic crowd, once the market started to correct, being an issue, where we've lived through that now, okay? As far as that's concerned, I think I could say the worst is over. Right? This week is gone now. Tomorrow's Friday. By early next week, you're going to start to see those numbers change as far as being big sellers to at least more neutral. So barring any exogenous event which gets the VIX to go nuts, the worst is over from that systematic crowd. But the risk is this stuff continuing for however longer it may be, right? I mean, we don't know. That's the problem. If we knew it was only going to be a couple days, then you say, what? You know what? It's worth getting into something now. And even if you're underwater for a couple days, if that's the worst of it, you're probably going to get bailed out. But we don't know, We don't know. That's the problem. We don't know. And that's it. What else is there? As far as sweeper activity is concerned, I mean, it's just, here's the, not even the strange part, but the annoying part, I would say. There are sweeps out there. Like, as you guys see, those of you who are Steamroom members, some days there's nothing to put on a top bet list, right? But there are days where there are 2, 3 names on a top bet list. So there's some buying out there. There's no, what you want to see is that commitment, especially when it's a tough tape. You want to see if somebody comes in and buys XYZ, okay, a couple days later, in this type of climate, that stock probably didn't go anywhere. You want to see that buyer show up and add and accumulate, right? Those are the high conviction plays that come out of here. A lot of times, again, in a correction, you'll see that in the new leaders. You'll see that type of action early on in a correction. Right? A lot of times you're spooked out because the price action's so bad from buying these names, and they usually end up being the biggest winners because they started accumulating them so early. We're just not seeing any accumulation. If you guys remember, how long ago was it? Probably a month now, but if you remember, there was some nice action in the energy names. If we spoke about that. And Energy's had a hell of a run. It had a reversal today, right? Let me see. Yeah, reversal today. But look at his move, Energy. So, now you're chasing, right? Now you're chasing here. Other than that, though, we've seen some buying in, well, they actually closed yesterday, but Shop recently, there's been some buying with some time behind it, SHOP. Again, you want to see them keep coming, right? You want to see them show up in the name, especially if it's down on down days. There's anybody else? Anybody know any names? Those of you in the room that, the uranium names have been getting lit up for a while now, right? This guy, Charlie Jack, CCJ. Look at this animal. Yeah, SMCI. It looks good. I look at it today, but flow wise, I'm saying it had that one. What was it? I think a November sweep. But we didn't see anything else in SMCI. You know what else has looked promising? This. I showed you guys today. Or yesterday. Oh, and today maybe. Oops. I found this to be interesting, okay? So this is, I like to look at this because the semis are a leadership group, right? I mean, that's where you look for leadership. They're usually the first names to find buyers and stuff. And you can see that, right, this, even before the market stopped bleeding in a sense, this is a ratio chart, the semis to the S&P, and you can see the turn here, right? So kind of now to the, well, not really, but close to the top of the range here type of thing. But this was interesting over the past couple of days. And today I actually bought Soxel I played this morning. I played some Soxel. Just because the price action and there was some semi-buying early on. UEC, that's another uranium name. But yeah, there's been some, well, it's a spec name. There's been some buying there. UEC. There's another one, too, UUUU. I mean, there's so many. They buy the ETF, URNM. This is uranium. This is nothing new. We've been seeing action in these names for a while now. For a while. We've been seeing more action in the spec names now, but even then, like UEC, this NXE, IONQ, again, we see like weekly activity and stuff like that, but the buying has calmed down recently. Had nice buying in this rally. You remember us talking about it. But yeah, stock looks good. I'm just talking about the flow. I'm talking about the flow. IONQ stock looks good. I think the problem, guys, and this is why for me, sweeper activity does all the stock picking for me. And the reason why I've stuck with that is it keeps me, there are times obviously it cost me money, missed opportunities, right? Stuff that I liked that didn't catch sweeper activities and things like that. But it also has kept me out of trouble, probably even more than cost me an opportunity. So for example, like this whole pullback, there hasn't been much sweeper activity. We just talked about the areas there have been. I could have very easily found a lot of stuff out there that I liked and lost a good amount of money. You know? And again, I mean, I don't know what would be different for me not to like, right? You had some decent names, whether they were tech names off a pullback or rotation type names that have been ignored at solid spots, but they just continue to deteriorate or have just sat around and done nothing. So the lack of sweeper activity is frustrating, but it also has saved me money. You see the logic there? That's the logic. So that's why, like, I can't go out and just buy an IONQ. It looks good to me, but if there's a lack of sweeper activity, not just an IONQ in general, I mean, this thing may just be stuck here or chop around. Or even worse, if financial conditions continue to tighten, IONQ's probably not going anywhere. Right? Is there a chance it catches news and bucks the trend? Of course. But what are the odds of that? It's possible. This might be silly, but does ever a stock catch like really good flow sweepers for days? And oh yeah, of course. Especially the more of the short dated action, or I'll give you an example. Like you could see Tesla catch sweepers all day long and then be down the next couple of days. Certainly. What I'm talking about is when we see kind of like fund accumulation in a name. So they're not. It's not really speculative action. It's a fund building a position in a name. And if you're asking that type of action, if you could lose money, of course, right? And a lot of times it's the market, the overall market, the reason why you lose money, right? There's no way of preventing that. That's the risk. That's why there's no guarantees in the market. I can love IONQ. It can catch the most aggressive sweeper buying we ever seen. If Putin launches a nuke tomorrow, you think the stock's not getting hit because it caught sweeper activity? Right? And I'm being a little extreme there, but you get my point. Could be anything. China, something goes down in China. You don't think the whole market goes down, this stock is not going to go down with it? So that's just the risk. What happens is when you see that quality accumulation in a name, especially in a pullback, one, it's likely coming from somebody who knows a lot more than us in regards to the name. That's one, right? And two, over my career, there'll be a hell of a lot more winners than losers off that type of action. So you're picking from a quality pile. And that's all you can do. You know what I mean, Jay? That's all you can do. There's, as much as we would want more inevitably from this game, all you can do is, and that's what's referred to as an edge in this game, is just bumping the odds, even if it's that much more in your favor, a little bit. you can make money in this game consistently. Again, if you manage your bankroll properly. But that's the way you got to look at it. More winners than losers. And if you do the right thing on your end, you play a fun game and you can make some money as well. But the pipe dreams you see on social media and, undefeated traders and all that shit, you're chasing unicorns if you think that's around. This is a tough game. It's a tough game. Do I think the Nikkei leads direction for NQ and ES? It's a possibility. I just, again, there are so many different things going on here that it's certainly possible. But what my concern, maybe because I just focus on it more, what I'm worried about, like I think the main hurdle is what I just showed you guys in regards to financial conditions. Because we've seen it in 2022. If financial conditions tighten and swaps are widening out, equities are going to have a difficult time. There's no question about it. So you can't get long into that, at least aggressively, right? You can't, no matter how good something may look to you, you can't just go out and buy it with three hands going against that trend. So, it's possible it could be a Nikkei thing that ends up relating to it, right? There are so many different things out there right now, but that's my main concern. Again, that's, if we kind of follow it, we talk about the SIVB blueprint. It's kind of how we would ideally want this to play out, depending on how long this process is, right? Right. We find it can happen here. We find a floor, right? The news maybe doesn't improve, but we start to see financial conditions stop tightening, and we see some buying come in to names. That would be ideal. What do I use for a sweeper? Well, we have the Steamroom, right? So it's kind of a trading room that we offer, which is powered through Trade Alert. That's where we're getting flow alerts from. But yeah, if you're asking where do we find out about sweepers, that's what we do in the Steamroom. That's what we do in the Steamroom. Do you adjust position size for sweeps? That's a great question. Position size, well, what I like to do, especially intraday, I usually like to keep the dollar amounts the same, right? Because day trading, I'm almost treating it, I told you guys, almost like I would treat a DraftKings account, right? I'm betting ball games. I feel like I have an edge or sweeper activity intraday for momentum purposes, but I'm also realistic. I'm not going to hit 10 out of 10 trades day trading. It's just not going to happen, right? So if I can finish over 500 and my winners are at the least, the same as my losses percentage-wise, right, dollar-wise, I'm going to make money, right? And we all know that as long as you keep that downside protected, a lot of times you get lucky on the upside. Right? All you need is one winner to get a little crazy on you, and you're raising stops, and if you're doing the right thing, that should wipe out 5 losers. So that's kind of how I look the day trading process. It's more of a grind, and as far as any big winners, it's usually luck, to be quite honest. I usually get lucky. Maybe I'll buy something, and as soon as I buy it, it just trades higher immediately, and I start, instead of just taking it off the table, raising my stop because I like the action in it, and then maybe the market heats up behind it and pushes it higher, right? Like, that's not why I played it. I wasn't even looking at the market, but I kind of got lucky in that sense. So those, again, when things line up, those are usually, my big winners on an intraday basis where they come from. Swing trading, I haven't taken a full-size position swing trading since late 2021. I'm get the years mixed up. Late 2021. I think it was October 2021. So I haven't done anything as far as swing positions. And yeah, it was tough recently when the market post SIVV kind of got hot with this AI stuff. But it wasn't my type of market anyway. I'm not chasing the Nvidias and the Apples and buying them at higher prices. That kind of stuff, I'm more than likely just day trading. I'm usually, where I build positions, I'm usually in names that not everybody is looking at, kind of thing. So, are you talking about for like intraday, Tyler? So I don't use any exacts, right? But I kind of like, for example, let's say like IONQ, right? And ideally, like, I don't like to chase because sweepers intraday are like a source of momentum, okay? Let's say IONQ into this sideways action, right? We have the momentum scanner you guys see in the morning, right? You see that momentum scanner they implemented into the Steamroom. Again, we're still fine-tuning that, but the reason Norris and the guys wanted to get that in there is because it's kind of how I look at the sweeper activity for intraday purposes, like the edge of the sweeper activity. So kind of like the ideal setup would be IONQ is just doing this, looks dead, and all of a sudden, boom, 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 a round or a wave of call sweeper activity comes in. Okay? Then you kind of get a little instant reaction. You'll see it right away. It's almost like the stock comes to life when that happens. And that's where I look for an entry. And in simple English, my premise is that sweeper activity, right, it already is showing momentum. I'm placing a bet that it's going to create momentum in the name. From a name that was doing nothing, that wave of sweeper activity is going to create upward momentum in the name. Okay? So if it doesn't, right, let's say IONQ pops and then just fades back and even just goes dead down here, showing no momentum, I'll pull the plug. Or if I want to hang out in the name, that's where I say, all right, I'll put a stop here at 1440 and I'll try to hang in there. Maybe they'll come in and buy more. But the last thing I want to do is if this happens, right, and over here I'm saying, you know what, I'm going to hold it. Maybe the market will push higher late in the day and I'll get bailed out. Right? Because that's not why I played it. I played it based off the sweeper activity that came in here, providing momentum in the name. Not for me getting bailed out two hours later by the market. So that's kind of my premise. So I'll tell you, God's honest truth, okay? A lot of times what happens is I'll get in a name here, it'll pop, okay? And I didn't want to take that, right? I'm looking for more to the upside. It happens to all of us, okay? And then maybe the market gets flushed, right? We get government shutdown news or whatever shit, any reason, okay? And this thing gives back that gain, and let's say even chops around here now, right? Or even if I get stopped out. Okay, so a lot of times, especially in a tough market, that can happen. This will happen. So a lot of my trades end up kind of like what they refer to as scratch trades. But I'm fine with that, right? Because if that's my downside and my upside's either a profitable trade that I end up taking or where I raise my stop because I kind of have everything lined up, you could see how big picture wise I'll be in good shape. Does that make sense? Good. Because sometimes I make people dizzy explaining things. So that's kind of how I look at it. Now, I'll be honest with you. A lot of people who try to play that way, okay, the scratch trades frustrate them. You understand? I know so many people who have attempted this game and have trouble really getting away from that break-even mark, and that's what ends up getting them to either quit or take the needle and blow themselves up. Okay? They look at being a scratch trader as a bad thing, where that was a complete opposite view I had. Like, for me, if you're telling me if you're new to the game and you're a scratch player already, I think you're there. You understand? That's not a problem for you. A problem for people who can't last in this game is they blow themselves up. They don't do what they're supposed to do. If you're break even, if you're there, you're on it. So that's the thing. A lot of times the scratch trades will frustrate people, and that's kind of what you're going to see here now, right? People making money, and especially in these larger names on the short side, they were probably playing the long side. They lost some money chasing. Now they're making back some of it on the short side, and they think that's the way to go, and that's going to last forever. I'll look for shorts, and they're going to get destroyed. They're going to get destroyed. There's no easy money. There's no easy money. There are going to be days where whatever you use, they line up your way, and you're going to eat. They're going to be good. You're going to make some money. But then there are going to be days where you can't get out of your own way. And if that frustrates you and you push it and break your rules, right, that's where people get knocked out of the game. And that's on any time frame, really. Not even intraday. That's any time frame. But you got to be realistic. And that's what I mean. Social media, there's nobody out there that is going to make a call every turn in the market and then be right. It's just impossible. And the guys who are more right than wrong aren't calling every little term that's out there. And don't sound cocky and arrogant about it, nevertheless. That's the truth, Max. That's really it. That's really it. Like the scalping, you gotta understand what Max makes a good point, because you're not gonna get rich off scalping. Like Max is saying, it's not even going to move the needle, especially initially. But that keeps you in the game for when things do get easier, because they do get easier. You see, right? Every Joe Schmo finds a way to make money in bull markets. So you kind of like, that's your defense, right? You're putting the defense on the field to where things line up and get a little better. The problem with the market is there's no set time on that. And it takes discipline and patience. That's the problem. But anytime you're not seeing, again, term used is fat pitch, but things aren't lining up the way you would like them to line up, that's where you got to find something else that you feel net, you can make some money, keep you entertained, but more importantly, you can hang around for that better time again. Right? Again, the way I started early on the webinar, everybody wants to come in every day and find and trade opportunities every single day. Everybody wants to do that, of course. But there's no such thing. There's no such thing in life. There's no such thing in life. Katie had a great line. He said they used to throw around on the floor. There are some days where the market's throwing around $100 bills, right? Something to that effect. Or giving out $100 bills. And there are other days where there's nothing really going on. If you're going to treat both those days equally, how are you going to make any money? You know? So, and that's kind of, listen, it's not even bull markets, right? You may even see like kind of what we had recently, right? Sometimes they line up better. Maybe this low, the turn, things didn't line up the way you would like, but maybe they lined up this turn, right? So you didn't fully take advantage of this. You're scalping, you're day trading, you're grinding it out, but here, that turn lined up and you made some decent money getting a little more aggressive. All right? That's kind of how you look at it. That's kind of the way you have to look at it. That's it. All right? You want to be there when they're giving out, what is it? You want to be there when they're giving out $100 bills, keep your seat at the table. There you go. God, did I watch that line, huh? Sharpies have been quiet. Can I find it here? I could probably find it here, right? Friday, hold on. Here's what Sharpies look like. We'll see tomorrow if they added any more into the weakness. I think it's going to come down to what hedge funds do. I think basically that's what it comes down to. Hold on. Where the hell am I here? What day is this? Is this? No, this is not. Friday should be here. Hold on. Oh, here it is. So that red line is that's Sharpies, and the green line is hedge funds, and the blue line, that's the small specs. We call them the riffraff. But basically, Sharpies have been taking the other side of hedge funds of recent here. So you can see they added a little bit of exposure the past week, because hedge funds added a little bit of short exposure. So if and again, there's a lot going on here. I don't mean to confuse it. Hedge funds have been shorting the living daylights out of individual names. Single stocks, they've been mauling, going in hand over fist, short names. But futures, they've covered that short position. It's almost like they moved their futures short bet to individual names. So if they ever take the needle and get aggressively short, you're going to see hedge funds more than likely take the other side. So if this week Sharpies, if you see hedge funds tomorrow aggressively add to their short here, so that would move lower, you're going to see this more than likely move higher. Kind of like what they did here, SIVB. So, you can see, it's going to be interesting to see how this shakes out here with even all the dynamics at play, as I say. Right, with financial conditions and rates pushing higher, right? Because something's going to have to give here. Something's going to give. Right? If this continues, more than likely, something's going to happen. Right? Something's going to break. Something, which will lead eventually to the Fed making a move somehow, some way. Probably brings more weakness to it if it goes that route. And what's the interesting part is it doesn't have to happen here. Right? I showed you the 2018 chart. We found some stability for, I think it was like a month, and then shit hit the fan. That can happen here. Yeah, that can certainly happen here. Where we do something like this. All right. You put in a little floor here just because bears are getting a little excited. Everybody thinks they found gold shortened, the big names. All right. So you put a little floor and then the bottom falls out. All right. That was I think that's what kind of caught everybody off guard in 2018 because I remember it like it was yesterday. Everybody was waiting for the Santa rally. They were looking for the Santa rally. And boy, did they get Santa. So see here? You had this down move. Here, everybody was bearish. And then you had this. Right? Then this again. Once this held, you had double bottom. Santa's coming. You know? That's it. It's over. And then this happened. So you can see how that could screw. And this, if you guys remember, was during the holiday weeks. Nobody was at the desk. Nobody was around. People were checking phones and seeing the market look like it was crashing. You remember Mnuchin had to get the banks on the phone. Remember he had the secret phone call? Later, Oscar. So this snuck up on everybody, right? Everybody got involved here thinking Santa rally. Look, here's December. Right? So everybody just thought, double bottom, Santa's here, go sip some eggnog and count your money. And then whoop. And this, the charts never do it justice, because this here, this felt like a crash. Right? It doesn't really look too bad here on the chart. But that literally felt like a crash. You guys know who were around, right? Then. And the noise behind it, Mnuchin's secret phone call. You had the Fed and Powell. So, you know, very possible you could see something like that here. I tell you, we are at a similar spot over here right now. You understand? We're at a similar spot where I think, in other words, if things continue like they've been, you're going to get something like this here. Right? Or you find some stability, and then we'll reevaluate. Right? There's a lot of good information here. A lot of good information here. With sentiment, with positioning, and with sweeper activity. Right? We see no buying in this. We don't see all those characteristics we want to see showing health. Right? Then odds are we're going to get something like that again. But if we see buying, broad buying, new names, that sort of thing, or just aggressive buying in general, likely mean that, okay, maybe the worst is over and we got more of some bullish momentum. What happened to Senga? What's Senga? You're better off building an algorithm and put, you know who you're talking about too here, building an algorithm? I'm lucky I can put my computer on every day. Build an algorithm. How am I going to build an algorithm? There looked to be a nice sweeper activity. Wells Fargo, can you take a look? Sure. Let me see. Wells Fargo. Let's see what we got here, Wells Fargo. What line? No, oh, weeklies, 41s. Let me see. I think I remember seeing a little weekly action, but it wasn't anything that I got excited about. Looks like sellers there. Looks like sellers. Here, I'll show you. What is this? Where did I put? Oh, I put it in the main channel, I think. What? Where is it? So it looks like selling that line. There were some interesting call rights today. Did you guys see that? A lot of the. Where'd I put this thing? Oh, I didn't post it. Hold on. What an idiot I am. There were some of those growth names today. Somebody was out there. There was a fund out there writing calls in a lot of those names. Net, S. What were the other ones? So you think about this line here? Yeah, it looks like mostly selling to me. Oh. Let's look at the line here, look. So I don't know, what do you use for the order flow, senor? What happened here? I got stuck? This fucking thing. So you see here, that looks like sellers. Yeah, there were a couple of them today. There was net and decent size. Out of the money calls they were writing, I think. Net, S, what was another one? The growthier names. God damn, I can't remember. There was like 4 or 5 of them. Oh, DT, this one. I can't remember the others. I can't remember the others. But yeah, it was a fun, maybe had some stock. Maybe they had some stock and they were just overriding some calls, collecting premium into the rally today. Very possible. Yeah, could be. They were opening calls, not closing, opening, Max. They opened new positions in it. All right, so that's basically all I got here. I would say to put a bow on things. Again, we're at a spot, as you can see, right? You're oversold, downside niner, filled gaps. What else? Can you add any more? You had the JPM collar. You had everything that pretty much was lining up with this level, right? It was hard to envision that we don't come close to that 42.5 level. It's what's interesting to see here. If we get the fever to break on financial conditions, it at the least could be something similar to like that 2018 floor we put in. And then again, we'll reevaluate. We'll see what that looks like as we're in it. But even if it's just a floor, like even if it's just that 2018 example I gave you, there will be winners in individual names. There will be money to be made in names. In other words, there'll be names where they'll have some decent momentum, upside momentum. You know, we just, again, with the help of sweeper activity, hopefully we'll be able to find them on a day-to-day basis. Or, again, something breaks, right? Or the market screaming the Fed's too tight, and this just gives out immediately. But, again, I don't see that lasting for a long period of time, because usually, right, if something breaks, you saw what happened when SIVB broke. Everybody was, oh no, inflation, the Fed's not going to bail out nobody, nothing, the Fed doesn't care about SIVB. Like, oh, they're just going to let everything. They allowed Lehman to burn. They'll never do that again, in my opinion. They'll never do that again. Okay, never. I don't like to ever use that word. But I'd be shocked if they purposely allowed things to burn. So if something does break, you get the Fed to react, you know, some short-term selling could put in a real nice bottom. All right. So interesting spot here. Interesting spot. And even more interesting because a lot of sentiment is already there, especially short-term sentiment. And the positioning stuff, by next week, we're in a lot better shape. So, important few days to keep an eye on here. Any last questions or anything anybody want to add before we wrap it up tonight? All right, we get Sharpies tomorrow. Always interesting to see Sharpies and hedge funds, what they do on a Friday. And tomorrow, I got the same game plan I had pretty much today. Especially if there's any weakness early on, I'm definitely looking to try to catch a squeeze, very similar to today. And I'm going to cue off, you know, the VIX, the dollar, the usuals, and credit markets. Gamma Gang, they were really short. I posted a little bit of it on Monday. They're bears. They're all bared up, if I'm not mistaken. They're all bared up. Yeah. And they kind of been on our page a bit. Well, in a sense that they never believed this was a new bull market. You know, the characteristics just weren't there. But here's what I was telling you guys, okay? Even though this October kind of was the bottom, right? And a lot of people think, right, the new bull market started. Even though we're not seeing those characteristics, they could show up here now. You understand? You could get everything you wanted over here into this poll. And what would be even better about it is that a lot of these people who thought it was a bull market will get shaken out here. I mean, that's typical market. That's typical market for you. But I will say, if you remember on January 1st, it was actually the end of December, we had a webinar and we said, right, the consensus going into this year was the market was going to be weak in the first half, buy that pullback, and then the second half, new bull market. Everybody had the same call. Everybody. The contrarian view would be the total opposite. Somehow, some way, it was so hard to see last year, but somehow, some way, the market would be strong in the first half, right? No recession. Everybody was guaranteeing a recession. And then the second half gets more difficult. Right? The total opposite. And think about it. It's been exactly the... I'm being... Even me, myself, I'm not going to lie. Like, I couldn't see how the market Well, I could see how maybe the market would hang in there, but I couldn't see how the economy would improve. I thought things would be on fire by now. God honest truth. So it was impossible to envision that. But when everybody sees one thing, it's always the opposite. It's amazing. Always. It's the market gods, my friend. You don't believe in the market gods, you will eventually. The market gods, they're a fickle bunch. They don't like cockiness. They don't like arrogance. Keep quiet. Fire your gun. And be humble. All right, so well, again, interesting times. We'll see. Seasonally, it's been a rough time, right? How much we've been talking about that? Forget it. We've been beating the dead horse. September into October is a menagerie. A menagerie. Almost always. I don't know why, but almost always. So we'll see. October is usually the bear killer. Let's see if that holds true. All right, my friends, always a pleasure. Sleep tight. We got Sharpies mañana, and we'll see. Maybe we'll get a little flush early on if we can play an intraday squeeze. And that's it. We'll reevaluate it each and every day. We'll see what we got. Yep. Thanks, guys. Enjoy the rest of the day.